back. Please, Yasir.
Hello, hi everyone. Welcome back to this week's YouTube live session. It is Fast Track Money. So it's Fast Track Me, Yasi, with financial imagineer Matthias Richter. So today, as usual, we are going to talk about one key topic. And today's topic, it is about how to profit from big trends. And later, we will explain to you how you can profit from big trends. But before that, if this is your first time watching this YouTube live, let me introduce myself first. So I am the creator behind Fast Track. So it's a podcast, blog, content platform where I bring guests coming over to my podcast. We talk about money, we talk about entrepreneurship, and we talk about career. So to help you to fast track your life in those three areas. And the financial imagineer, so-called, actually his real name is Matthias Richter. So he has a website called Financial Imagineer, where it is a personal finance blog. There he shares his personal experiences, how he managed his money, and also other people's experiences to help you to imagineer your life financially. So here we are collaborating together as a Fast Track Money. We are bringing weekly YouTube live, talking about personal finance, talking about investing, talking about everything related to money. So you can learn from all those topics and better manage your own personal finance. And on top of that, we have collaborated and then curated a 6-week money course, which is now running. We already have few batches of students, and the next one will be in May. So this course is designed to help 20 to 30-year-old professionals to learn everything you need to know about money and to accumulate wealth for the long term. So I won't touch too much on that. Let's come back to today's session, how to profit from big trends. So Matthias, let me ask you a first question. As
Sure.
an investor yourself, do you find that identifying trends helping you to profit from your investment decisions?
Definitely, yeah. I mean, the biggest trend every investor probably follows is that we all have to believe that our humanity is actually improving going forward, so that we will move ahead. And if you believe in that, that's a big trend. Then you can buy index funds. It's as simple as that. So that's a big trend. We believe humanity will advance. And then from that on, you can see a lot of smaller trends, niche trends, trends here, trends there. And you can try to do the nitty-gritty work and try to go after some of these. It could be super interesting. Or you simply say, no, that's not for me. I go for the big stuff, the big trends. And the bigger they are, the easier it actually is, because if you give it enough time, you don't have to be too smart about it, right? But the more you want to go into details, the more you want to do it short term, the more difficult it gets, and the easier it gets to get it wrong as well. And trends, I mean, there's a huge, it's a simple word, but a lot of things can be behind a trend, so to say.
Yeah. Trends comes and goes. There are trends last for 10, 20 years. There are trends last for 1 year and 1 week even, the GameStop
Yep.
thing.
Yeah. So, and also it's a little bit like fashion, right? Sometimes you have the people, recently again, more people like Bitcoin. So it could be a trend that people invest in Bitcoin. We have an underlying trend that more people are investing with ETFs and with so-called passive index tracking tools, which is also a big trend because there's much less money actively managed in the markets. There's trends that people are looking at different economies, right? There's futures trends, FX currency trends. When you say we don't believe the currencies will be stable if so much is printed. So it's similar like fashion. And I think the trend enhancer usually in our world is the media, which has usually clickbait-worthy tag titles and headlines. And then at the end, you can think of humanity as the nervous ones. For instance, they will run after these taglines and they go after the trends, which could be very powerful, but it could also be very stupid.
As you mentioned, the fashion trends, it could be an idea for investors. You want to invest in like listed companies. I think you mentioned before Lululemon. It was kind of very popular at certain points. And I have a friend who, I don't know if you know this one. Wait a second.
Okay.
So this one, do you know this backpack? This I think it's from Sweden, I think.
Oh, yes. I've seen that before. Yeah.
So one of my friends, what he did is he started to see many people are carrying this backpack in different countries when he travels. And then he thought, it's in high demand. So he started to buy the shares from this company.
That's
and after
exactly
a while,
how to do it, yeah.
Yeah, and after a while, he gained a lot of profit. So what he did is he bought this backpack for himself and his wife. Why? Because it's for free. Because he invested in this company, and he made so much profit. And for him, it's free.
Yeah, well, I was once in Taiwan, and it was the grand opening of the first Uniqlo shop in Taipei. And people went there to wait in line for 2 hours just to get inside the store.
Same in Singapore. There's super long queue,
It was that trendy. And if you look back, the fast retailing, the stock, you could have bought it at less than 10,000 yen. And now it's way above 60, 70,000 yen. You could have sevenfolded your money. And of course, that's something when you see a lot of people like something like the backpack you just showed, or Lululemon, or it could be people start to use things around you like Netflix, Spotify, Sonos loudspeakers, all kind of things, right?
Yeah. I remember I had this one share of Disney, and at that time we didn't have the Disney a subscription. So when the market crashed last year, and I thought, oh, Disney is not so interesting. Let me just sell it and then buy ETF. And then I sold it at the lowest price point ever. Just the point of the deep. I had one share, basically. I just received it. And now looking back, there's so many people having subscriptions with Disney, apart from Netflix. It's how, as an average investor, how would you advise people to spot the trend before it's too late?
The first question is, do you want to do it, yes or no? Or do you think you want to do it? Do you want to take the time, yes or no, right? And if you say yes to that, then you have to experiment. You can get it damn wrong. So I wouldn't advise, if you are new to that, to go in with a big chunk of your money, but you can experiment and see how it goes. Like you say, Disney, I think the share was roughly at $80 last March. And then because of Corona,
around $80, yes.
And I think it moved almost up to 200 now. So it more than doubled, definitely. I saw it at 180, 190. So it's incredible. And of course, that's something. You see it with Corona as well. The virus came, and then all the parks had to close, and then people start to be scared about holding Disney shares. But at the other side, the business, the brand, the streaming, all of that, it still exists, right? So it's just a question of when it comes back. And then same thing now, maybe for traveling. And I think you can look at some economic indicators. I've been looking at airport usage numbers in the US in the last few weeks. It's very promising. There's a lot more people go back to travel, which will help the airports, the hotel industry, the airlines. It also is a significant boost for oil demand. So the OPEC just agreed to have more oil output, which dumped the price yesterday by 5% for crude. But all these things go in line, right? And then you can think, okay, maybe we will not be back to where we were 1 year ago or 2 years ago next or this summer, but it may take time. But there is a trend that people will go back to travel eventually, right? And then you have to see, where are the stocks still lagging? So if you want to identify something like that, you take something that happens now. Then if you can go back in history and see what has happened last time, history never repeats, but it rhymes. History rhymes. You can see, oh, what happened there? What happened last time? And then you can maybe see, oh yeah, because this and this and this also happened, that one was the logical outcome of that situation. And then you can figure out maybe it will be similar, right? It is never exactly the same, but you can see some parallels there. And another thing, I think, like we just talked with the backpack, the Lululemon, and so on, always look at what your friends are doing, or even better, like when you get older, I'm not that old yet, right? But if you're in your 40s, I have kids, look at what the kids like to do. If they like Pokemon cards or things like that.
Oh, Nintendo Switch.
Yes, or Switch, exactly. Huge trend, right? And the Nintendo Switch is also something very, I like it from the creativity, right? And one thing there was then, okay, I understood that if my kid want to play with another kid, both of them have to have Nintendo accounts, and the Nintendo account costs again a monthly subscription, right? Then both sides have to subscribe. And then if you buy some online games, they are inside this subscription. So if one day you cancel that, maybe it's lost. You don't feel comfortable to cancel that subscription anymore. And then it's very sticky. It's super sticky business. And the more people like to do that, the more have to pay. And so the revenue of the companies go up, right? So it's you see what the kids do. Usually they are trend setters, right? To use that word as well today. And or your friends, if there's some new things, people suddenly switch, or it's very fancy to do something. And I see Tony. Hi, Tony. Welcome back. Tony has a question. He asks, what stocks or markets do you think are currently undervalued? Any suggestions of stocks to keep an eye on this year? So I believe the US is ahead. I think it's all about vaccination at the moment. I think vaccination and economic recovery. So maybe what is still lagging is Europe a little bit at the moment. I have seen some stocks here. They still have price earning ratios of below 10, which is very, very cheap. I have looked at certain companies recently, like insurance companies, that trade at below 10 PE, and they have a dividend yield of 4 to 5%. One of them in Switzerland even has a 6.8% dividend yield, which is amazing. And it still has like 10, 20% upside to the normal. So certain things like that are lagging, is maybe more the stable thing. And then more the riding the trend wave. I think there's companies like travel companies that you can go into individual things, who are undervalued, but we don't know how long it will go. But if you consider that maybe sooner or later we will go back to something like it used to be, these are still very cheap. I'm just thinking about airport stocks. In Europe, you can buy like Paris, Frankfurt Airport, Zurich Airport, even though these have already started to pick up somewhat. In Singapore, you can buy the whole airport management company, which maybe already is back up half. You can even invest in ETFs. There's an ETF called Away, AWAY. It's like traveling, so hotels and so on. Accor is a very good stock also for hotels, which is lagging. You can look in all these industries if you want to bet on Corona recovery, right? And then the question is, what if the vaccination doesn't go ahead as planned? Then, of course, this trend will be broken, and that's the risk, right?
Mm-hmm.
So
what do you think that's, usually in finance, they were talking about the current stock price is a reflect of the future as well, just discounted.
Mm-hmm. Yeah. So usually the current stock price is a reflection of the future expectations. And if you trust the efficient market hypothesis from the theory, it should all be priced in, right?
Yes.
So then the question is, does it happen better and faster than expected or not, right? And last week we had in the US, there was a big report with non-farm payrolls, and the street was expecting like 600,000 non-farm payrolls. That means new jobs. And the actual number came out was almost 1 million. And it was like 400,000 more than expected, which is a huge difference. And then immediately you see the interest rates jumping higher, which has an effect on the discounting again. So if your 10-year treasury yield goes up, it means you have to discount your future expected earnings with a higher percentage, which means the shares should go down, even though actually it's good news. So it's a very funny thing. But then after a few hours, the market calmed down and said, "Okay, it's still good news after all." And I think it's always it's not so easy to plan that and to look into this, but there's many forces at play. But I think in general, I think still not a lot of people believe it will be a super smooth recovery, but there could be potential for surprises. And then the next thing is usually these economic indicators, they reach a peak roughly 1 year after the worst point in the recession. And
what do you mean? What are the economic indicators?
Confidence, like PMIs and so on, the purchaser manager indices, and all these numbers. By theory, we should be at the peak of these figures right now.
Yeah.
And the difficult point is now, what if next month these numbers drop? Then the people will be disappointed, right? Even though the economic recovery is still gaining steam. So that's another thing. It could be with stock markets, we say it's usually 6 months ahead of economic numbers. So by that theory, we should still see numbers climbing there into summer as well. So it's not that easy. Sorry. I hope I'm not too confusing if anyone has any questions here.
So besides the short trends, now we're touching on about Corona, airport, traveling. Is there any long-term trends that you are seeing? Obviously, recently you wrote this article about ARK. It's quite interesting. Just tell us more about it. Yeah.
Okay. Well, that's one of the most unlimited upsides investment stories, right? You want to invest in space. Why? Because Earth is limited, and eventually we want to leave the planet and go somewhere else. And then with that, a lot of innovation might come. You may have a lot of how to say, like a space race again that comes up, people putting in more capital. And once it becomes really mainstream and trendy, the whole thing might go up even more, right? ARK, ARK Invest, they have a lot of other funds as well, not just the space fund. They have an innovation fund. They have an automation and robotics fund. They have a genomic research fund, which is also super interesting, not just for vaccines. It could be for cancer curing and so on. So there you have a lot of things that could become interesting. And maybe not to just talk about ARK, but you have all these trends, right? You start with a trend from, we have global warming. So what do we do about global warming? It could be more electric vehicles. It could be more renewable energy sources. It could be that governments will more focus on that. You see in the US now, they make policy shifts and they will actually subsidize some of these companies. So if you invest in these, you will profit. And maybe the trend there has left a little. So there were ETFs about clean energy half a year ago. They did tremendously well. And you have trends that are even easier to guess, right? I mentioned before, humanity is advancing. So you have population growth. With population growth, very simple. You need more food. You need more space. You have people moving into cities, which is an urbanization trend. And all this stuff, you can always look into more details and find companies that actually fit these niches to invest.
And for investors, for like every average investors who do not have full time dedicated to identifying trends, how to balance how you invest every single month, dollar cost averaging, versus how you invest riding on the trend. How should they do it?
I mean, the less time you have or you want to devote to that, the more passive you should go. That's rule number one. And if you take out more time to do it, I think start with 5 to 10% of your investment portfolio, something like that. Treat it like a so-called satellite investment and gain experience. You will learn there and get better.
And pay tuition fee.
Pay tuition fee eventually. I hope for anyone here doesn't have to pay some tuition fee, but this is sometimes what happens, right? And it could be everything goes very well, is very good, right? But then eventually one day you will get it wrong. It might go back against you and so on. And then it can get very expensive, right? You see things like the internet bubble, right? You have 2000, 2001, that was where I paid my tuition fee. In 1999, before the millennial, I was super happy I exfolded my money there, and it was so easy. And then I think you get a lot of self-confidence after that. You believe it's because of you and because you are so smart, which is most likely not the case. You of course, you identified certain things, you got the things right, but then later you will become very resistant for other information. So another thing is also stay open-minded and keep learning, never stop learning. And I think that's what makes investing so interesting.
There are so many trends. We talk about short-term, long-term, clean energy, fashion, robotics. How can someone get started to, just to study more on one trend? Because it's really a big topic, right? There are so many directions to go.
Yeah. I think one thing that makes it easier maybe is if the trend is somehow linked to your own passions. So let's say if you are somebody that likes computers, IT, and so on, you can become a big data specialist and see how all these companies are using big data to make money out of it, right? I always say for big data, if anything on the internet is for free, you yourself are the product, right? And then who are these companies selling you to? Because you are the product means they have a market for you to use their things for free, right? The other thing, if you talk about Lululemon or something, it could be a fashion person who has a deep interest in that. Or if you are a movie fan, you can be looking at Netflix, Walt Disney, other things, probably new contenders. So I think start somewhere where you have a deeper understanding, because that usually will help you. A deeper understanding and a passion, then it feels less like crunching out some time and make it look like work. And the rest you delegate.
What would be the, let's say, reasonable investing horizon someone should look at if they're riding on the trend?
Well, if you look at the population growth and all these things, I believe it's a long-term trend. So don't expect something to happen very quick on that. So you can be right, but the market proves you wrong for 2-3 years on this. So maybe expect 5 to 10 years on these things. For population growth, very interesting. You see like agriculture land or like food technology, meat replacement technology. You have companies like Beyond Meat, right?
Yeah.
It's tremendous what is out there. And you can even combine this trend with the space trend eventually, because if more people want to go into space, these companies maybe also need to help to make more food for these people that go there. So it's somehow linked again. But and then maybe a hurricane comes and the crops are damaged, and maybe the agriculture land that is not damaged will go up in value. Then maybe the investment will do extra well because it's more scarce. Then maybe you have to think again. Another trend could be water scarcity, which is also something people sometimes are not so happy to invest in because they feel like it's taking away resources from other people. But with population growth, there will be more food and so on needed. So that's a long-term trend. Something else, global aging. You have people getting older. You can actually look at the pyramid of the population in different countries. And you also can look at the reproduction rate. How many kids are there per female? Or how many immigrants are coming in? Mm-hmm. This could have an effect on real estate market. This has an effect on probably old age care companies. And then you can find, is there an old age care company? And you can actually see exactly with the pyramid when these people are maybe reaching the age of 80, 85. And then you can calculate it back. Then you have your boom moment. That's where usually the market will need more solutions in that field. So that's rather predictable in a way.
This is a very interesting point. Do you know by heart the average age per country or continent?
I have checked the median age. I have seen in some African countries, the median age is not even 20. I think in Switzerland, we are at 42. If you go to Japan, it's closer to 50. So it's very interesting. You can go on the internet, the CIA World Factbook. You can see population average median age. And there you can see what's going on. Very simple. And these people have different needs at different age. And so how much time to spend? I mean, certain things are more short term. Let's say you have politicians that talk about new policies, then maybe you can ride a wave. It's a little bit like momentum investing. You see something picking up, and then once you think, okay, my vision has materialized, then maybe you need to pull the plug and find something else, right? So that's the trend investing there in the very short term. But if you say, okay, I'm here for the long term, then it can be more passive as such.
Right. Let's say for individual investors, it's really difficult to know what is the right moment to enter the market once you identify the trend. And on top of that, when is the right moment to exit the market, right?
Oh, yes. So that's why I think if you are new to it, the easiest is either choose something you are super passionate about it, or you choose a long-term trend that you believe will work out in the next 10 to 20 years, and you find like a themed ETF or a themed mutual fund that covers that, and you can see how that works. And don't put all in there. As I said before, use this as a satellite investment.
Yeah. Not your bread money.
Yes, no. Yeah, and keep observing what's going on in your neighborhood, your other countries. When you travel, I love traveling, right? So if you travel around, you will see how different things are moving at different speeds in different countries. And then you can say, hey, actually, this would be great to have in my country, or this would be great to bring there. You will see certain things that are missing in some places, right?
Yeah.
There's actually at FinCon in 2019, which is the blogger conference, I met the three guys of Dumb Money. They are really exciting, and they have their own show on YouTube, and they have their book, Laughing About Wall Street. And sometimes all they do is they go on the street, they check out new shops, they ask and interview people, and then later they will make a decision how to invest on certain things. But they actually go to do the homework on the ground, the groundwork, so to say.
Yeah, this is very interesting. Because for the shops, you can actually see the physical shop, and you see how many people are queuing it, how many customers they have. And this reminds me of all the new trendy bubble tea shop. I don't know if you are familiar.
Yes. Oh, very familiar. Very familiar.
Yeah, exactly. Once a new shop is opening, there's like some kind of like a headline on the social media in this city. Oh, the very first shop of this bubble tea shop opened in this shopping mall, and then there were people queuing for hours in order to get one. I saw that in Singapore. I saw that in China. I don't know if you've seen that in Taiwan. That's just some trendy,
super
trendy drink shops. Yeah.
In Singapore, I have seen some shops popping up. They charge maybe $3 to $4 for the bubble milk tea. But then if you go to like a special area, there were actually bubble milk teas for $7-8.
Yeah, of course. Yeah. Yes, it's true. Yeah.
And the shops look like an Apple shop. If you walk in there, it looks super expensive, and it doesn't look like they're serving drinks there. And they have very, very little like space to sit down. So they want you to go in there, consume, and then very uncomfortable chairs. But it looks like a Mac shop, an Apple shop, white, clean, polished. And of course, you can invest in that. And in China, you saw what happened to Luckin Coffee. So they were
actually this story is funny with Luckin Coffee, because when I was in China, I went back maybe a few months later, a year later, I saw so many Luckin Coffee shops. You know, I saw, oh my God, this company is doing great. Like I didn't invest, but I was discussing it with a friend. Yeah, like I don't know what happened later, but it was a bad
for the ones who don't know, they were faking the numbers of visitors and customers, so it's actually fraud. But I do know, I have a friend who, whenever he looks at certain things like that to invest, he actually in Shanghai, you can actually hire people. You can hire them to go in front of different shops and click, and count how many clients are there.
Okay.
At certain points in time. So my friend, he hired some people to go there at 3 different outlets to count. And then he made his own calculation and figured it may not be accurate what they're reporting.
I see. But it was surprising because I actually saw the shops are opening everywhere. It's
Because if you see something is so hot and people are talking about it, they're creating the trend, and then you will have people who want to invest in there as a franchise taker, and then the investors' money comes in, and it's just a machine. And like in the US, there was this company called $1ShaveClub.com, and they were shipping razor blades to your house for like $1 a month, which doesn't make sense economically. So it was so cheap. They got so many clients. And at the end, I think Unilever and Gillette, they started to use a big market share because the other guys were undercutting them. And then at the end, one of the big ones had to buy them out. And I think the company was bought over for more than $1 billion. And the founder is I think his net worth is like 300-400 million now, but actually he built up the whole thing with not earning money. So it was a loss producing company that the only aim was to gain market shares as quick as possible. And then it looks very trendy, but there could be nothing behind it. So that's also one of the traps of trends. Like, I don't want to mention Bitcoin in this thing because there could be more solutions, but for Bitcoin, right? But Bitcoin also, some people say there's nothing behind it. Why should it be worth that much? But there could be certain things that because everyone buy it, it doesn't mean it's good. So that's where you have to be careful with trends and trend investments.
Yeah, it's a bit tricky that you see it's getting more and more popular, but you have to really study it yourself and understanding the reasons behind it. It has to be, on a reasonable ground. Maybe the population is growing, the lack of resources, but not because everybody else is like consuming it. I mean, it goes with this backpack story. Somehow it ended up as a good result. Yeah, I agree with you. I think it's a little bit tricky investing trendy stuff.
At the end, then it's all about fear and greed. Fear of missing out versus the greed of also riding the wave. And then when is enough? That's the whole thing. Understanding these emotions and the herding effect, the human psychology.
Yeah.
I think that's another field to study, which we could cover some other day eventually.
So we have to make this disclaimer, right?
Yes.
Audience, you are watching this. So do not jump into try to profit from big trends. You really have to understand it, believe in it, and do your own study. And if you are, beginner investor, just try to stay on the, I would say, ETF, like a thing that is more diversified, stable. And
ETF could also be very rocky. There are some cannabis marijuana ETFs. they were also very trendy 1-2 years ago, and they went up and down the same way, right?
Okay. Avoid trendy stuff.
No, that's not the point. Figure out trendy stuff and learn it, because usually the swings in these things are like are exaggerated. The beta is higher. And if you learn how to time it, which is super hard, a lot of people fail at that, it's a very exciting thing.
Yeah.
So step by step.
Yeah. First to learn the fundamentals, understand investing, and then, like you mentioned, like a satellite portfolio or satellite investing. Yeah, try it out, but study first. So if you
do your homework.
If you really just starting right now and haven't got started, really read some books. I think you wrote some articles recommending some good books also in my blogs as well. And it's like we are promoting this, but we really create this money course for you to learn the basics. Not just about investing, but also about other areas of how you manage your money and create more income. And then we talk about investing. So step by step. I guess that's it for today's session.
If you have any questions, now is the time to write. Please type into the comments. We can still answer that. Otherwise, maybe tomorrow, if you have time, you can join us for a webinar, right, Yasu? We have a network.
Tomorrow is the 8th of April. If you are watching this after 8th of April, just check out the website in the description below. Maybe we will have more webinars coming up. You can learn different topics. It's free, open for everyone. Just click register.
It will be a Zoom call. We will talk with each other. It's more a dialogue. This one here, we have a dialogue, Yas and me, right? But it's not just one way, right?
Sometimes monologue.
Yep, and thank you so much. Yeah, next week we will be talking about a topic that is more about how to pass wealth from one generation to the other generation. In Chinese, they have a saying that goes like, wealth does not survive 3 generations. Fu bu guo san dai, they say. And we want to look deeper into that. It's usually the first generation creates the wealth, the second one manages to maintain it, and the third one, unfortunately, usually loses it again. And we want to see and cover that topic a little bit. I have a lot of background information from helping people to not fall into that trap. And maybe you also have some stories in your family and friends to relate to this. I think it's a very interesting topic. Also, if you have kids or plan to have kids, and if you look at your parents, what they gave you as a financial education backpack, so to say, and how to pay it forward.
So next week, remember, same time, Wednesday at 7 p.m. CET. And we're talking about the generational wealth. And then if you're interested to learn more on other topics about how to manage more money, personal finance, tomorrow is our free webinar. So you can still register now. Go on fasttrack.life/money course. And then in May, we are going to open another batch of money course. We are now running one batch with some students, and still next one will be in May. Golden opportunity for you to have live sessions with Matthias, and we will be, helping you along the journey, ask any questions. And if you decide not to join the course as an audience, you'll also feel free to book a 30 minutes consultation call, same on the website, or read his blog articles on financialimagineer.com or fasttrack.life, or all the contents here we're providing for free. So really, thank you so much for...
If you like that, please click the subscribe button.
Yes.
Also YouTube, give a like, leave some comments there, share it with your friends.
This is such an important call to action, and I never did it.
Right now, do it right now.
Like, share, and subscribe.
This is how we can profit from and spread our message. If you liked it, right?
Yeah. And if you're watching this from the Facebook channel on Financial Imagineer, you can feel free to comment, ask questions, and we'll always be there to help you. Yeah.
Awesome. Thank you so much. Have a good day.
Bye-bye.
Bye-bye. Bye-bye.